Hello everyone, welcome to another Elliotwave concept. It's been Michaels. Today in this video I will be looking at the week ahead, what opportunities are there, what areas should we start looking for buying opportunities, selling opportunities, and for those of you that still have some positions open, be it on profit, be it on loss, I will put it that it's still a floating loss, okay. And also for those of you that have positions in profit, it's still a floating profit until you've closed that position, okay. So this video will also help you to identify one, what I think in my own opinion or my own view of the market using the Elliotwave concept, and also it will also be as a guide to you in the week ahead. So today is the 12th of June and I'm making this recording. Okay, so last week, one of the things that also happened last week that really got me really upset, okay, was my entry on gold not being triggered, okay. If you go over to watch my previous video, which I did analysis on gold, you would see that one of the things I wanted to do right from market opening was to buy gold around this point here, okay. So as you can see the timestamp on this count here, you can see that this is on the 6th of June right here, and I put up a pending buy order, okay, on gold. And price, I don't know what happened, price came so close into triggering that, taking that entry, but didn't, okay, and then just reversed around. That was, so it's more like Monday, this was the 6th, moved from 7th, 8th, 9th, and then 10th, okay. So I had this position open for more than 4 days, okay, just waiting for this trade to align. And one of the things I wanted to do, or why I want to take that position, is what I'm going to explain also in the later part of this video when I get to the gold analysis. Okay, so let's just go over to look at another analysis I did make last week, was also on Bank Nifty, right? On Bank Nifty, what I put out on Bank Nifty, if you go over to my channel and you see my analysis on Bank Nifty, is I want to buy Bank Nifty around potential areas of very strong demand, okay. So I'm expecting that we should be having strong demand around 34182, all right, around that structure there, because I feel that demand should be around that point there. And also for those of you that are still waiting for that, okay, it's also a good time to wait and possibly still put up some you can actually have two trading plan, okay. So who said you can have two trading plan? Yeah, you can have actually two trading plan, right? So while waiting for an entry here, you have to also wait for a potential breakout such as this one on Bank Nifty, okay. So you wait for potential breakout. There could be a possibility that price can or might just break out of this point here and then continue upside, okay, while waiting for your entry to trigger on this one. So if whichever that triggers first, okay, you allow only one, okay. So you can allow only one. You don't just take two positions off this one, okay. You should allow only one, right, to run. Let me take a look at also what happened last week and also with the DXY. And these are things I've oftentimes pointed out to you several times in the market about DXY, okay. DXY, for majority of times I want to see DXY still continue making bullish runs, okay. I want to see it still continue making bullish runs because apart from the fact that I did mention this before, okay, there's a great chance that DXY could get up to 110, 112, okay, in the future. So I'm still expecting that to still continue, but this is overall where I'm expecting my wave 5 to hit around the 119. Okay, so I'm expecting DSY to still further continue upside. Okay, so there's no two ways about that. So I expect that to further continue on a weekly scale. This is I expect DXY to still continue further testing, maybe back into the zones. Okay, that's going to be very good to see. Okay, very good to see, because what I'm looking at here, from the fact that I'm seeing potential structure here. Okay, for those of you that have been trading the godly pattern, okay, the bad pattern and all these patterns here, so I see a potential setup such as this one, that price could rise up to breaking this point here before making another drop to downside. So this is one of those patterns here which if you're trading them, okay, so it could also turn out to be one of those patterns right there. Okay, I've also seen complex pattern in the past, and price have also shown complex pattern in the past. So there's no two ways about what the market would do at any point in time, and you can as well that previous performance doesn't guarantee future results. In trading, trade with only the money you can afford to lose. All right, so what we all are doing when it comes to trading is trying to predict what the market is going to do over the next few days. So whatever we're doing here is prediction. Okay, and once you apply that with proper risk management, you're going to be seeing result. Okay, you're going to be seeing profit. Okay, so that's the difference between a profitable trader or a professional trader and a struggling trader. Okay, so a professional trader looks at possibilities, okay, and also looks at probabilities. What is happening, what might happen. Okay, so you try to mix all those two up, and then you set up a trade. Okay, so you hop in on a position, you put up a good amount of risk, and then you wait, and then put up a good amount of target, and then you wait for price to just ride up to that target. Okay, there are two ways about that. Okay, but while price is riding into target, you want to be applying proper risk management in terms of money management. How do you manage your positions after it has gone into profit? So these are the things which profitable traders, okay, or experienced traders look out for. Okay, look out for this kind of things. Okay, all right, so let's move into the first one here. I'm going to look at USCHF. Okay, so for USCHF, if you remember in my last three weekly videos, okay, I pointed out the 38.2 Fibonacci retracement areas which I wanted to take a position off. Okay, for the 38, I was expecting a bounce of 38.2, and that was what we had. We had a bounce of 38.2, and I was only able to capture 200 pips from this move right here. Okay, because I put up a 50 pip stop loss which I shared with you guys, and my first take profit was 100 pips, my second take profit was 200 pips. So I was only able to capture 200 pips from this move right here. Okay, so I'm going to also wait for another setup to develop. So I'm not going to jump into this one here because I have no good setup anymore on USDCHF. So I'm going to wait for more price actions to develop before I then look for another position to hop into the trade. Okay, so looking at this also on a multi-time analysis, I can't really make any statement of this one for now. Okay, but rather I would just say it's best to wait to see how price develops further and further again. All right, so let's move into another one, USDJPY here. For USDJPY, after we did see a break out of this zone, right, we did correct of some sort after a double top here. We did correct in an ABC format, and then price completed here. As you can see, we had a very strong bearish candle, actually end of wave candle pattern here with a very strong red body. You can see here, so price then started to move in that fashion there. So we've seen price break the previous structure here, so possibly we could be having a retest. Okay, I don't know, but it's possible that we could be having a retest of this zone, and then we can continue upside, because a break above this point here happened with such high volume. As you can see, it happened with such high volume here, and then we broke out of this zone with a high volume, and I can expect that there might be a retest of that zone. So possibly in the week, if we could be having retest around this zone in the week, and that could also be the best time to look for another buying opportunities around the 131 154 131.154 could be a good area for a retest. If that happens, I would actually encourage you guys to take in another position here. Okay, it's way too high. Okay, it's way too high if you are an indicator trader. Okay, so if you put up a stochastic on this one here, you're gonna see that we've also exceeded overboard. Okay, so we've also gone into overboard territories. Okay, if you're using an RSI, if you're using stochastic, if you're using the MACD, you're gonna see that we've gone into overboard. Okay, but however, when price gets into overboard areas, okay, price could stay in overboard areas and then still on your indicator, and then price will, or the market will still continue making further uprises. So indicators are not very good signs or good tools to use in the market alone. You want to look at price action. What is price, or what is the market doing? All right, you just look at indicators alone. You want to look at what the market is doing, how the market is reacting. Okay, what is also happening in the whole general market. Okay, so for this one here, we can as well look at highs that also hit previously for USD around 2002, okay, which was around 135. Okay, so we can also aim at price hitting that point there, and then possibly a continuation could also come from that point there. But there is a great chance that we might be working out a corrective pattern here. Okay, there might be a great chance that we might be working out a corrective pattern here, and it could also validate. Okay, it could also validate. It could also be a good one. All right, because we have a possible ABC structure, and at the break of this point here could also continue sending price upside. Okay, so it's a possibility, because why I'm looking at this as a possibility, that we have an end of wave candle here that also validated with all these moves to this upside here, and also for the break of this zone. So this was all break at high volume. All right, this was all breaks at high volume. Okay, this was a structure that was broken out of high volume, and also this was another one. So this turned out to be an end of wave A, B, so C. So we looked at this as end of wave formation here. Then we look at the next one to continue upside. So there's a great chance that we might be hitting 135 in a GV, rather than actually looking at the pullback that is going to happen here. Okay, so if we hit 135 first before this pullback happens, I'm not going to wait on this bounce here. Okay, I'm going to wait for a very different price action entirely. Okay, so ahead of the new week, and we're also expecting lots of news coming in from the new week. Let me bring up the economic calendar for the next trading week, so you can look at what to expect from the next trading week as well. Okay, so we're not having any news coming in from Bank of Japan. We're not having any news coming in from Bank of Japan, and let me pull that up on the screen. All right, we're not having any news coming in from Bank of Japan. On Monday, we're having Australia. We're having bank holidays, and also on Tuesday we're having United States PPI. And we're looking at some other news here as core retail sales on Wednesday, and also retail sales coming in on Wednesday. And we're also going to look at the FOMC on Wednesday, 7 p.m. And I think that should be the few news that we're going to be looking at here on the week. Okay, so interest rate also coming in from United States there. We'll be looking at that, and we can expect that we might be having more volatility during that period there. For gold, I'm still going to keep my pending order on gold as it was. Okay, I don't know why, but I feel this area here is good for me, so I'm going to still keep on my pending order here. But I think overall I've seen a different price actions, or I've seen a different price development. So if this is going to be my contraction and breakout, okay, if this is going to be my contraction and breakout, okay, sorry, I'm having to jump into gold. Okay, all right, if this is going to be my contraction and then breakout, okay, so fine, good for gold. Okay, good for gold. All right, I'm not going to jump into this point here and then start trading gold off this zone here. Okay, I'm not going to do that. Okay, so if I have a double rebound, okay, a double test of this zone, okay, fine, good. Okay, 1821 could be a good area for gold. All right. Okay, so we look at Euro USD, what happened with Euro USD, and how I intend to approach Euro USD as a whole. I pointed out in my last video, okay, when I did analysis on Euro USD, that it was not the best time to take a trade when price was trading off the zone, okay, for a sell, okay, and it was also the best areas to look at price for a buy. All right, so now we have a possible structure, and what we have here is that price at least attempted to correct of some sort in here. Okay, this should have been the area price should have bounced off and then maybe continue upside. Okay, but for price to drop off into the zone here, I think I will need to wait for any pullback that could also happen maybe back around the zone here. Any pullback around the zone here could also be one of the areas I'm going to look for the next short opportunity on Euro USD. All right, so possibly we might have a rebound, okay, or a retest of that zone or not, right? But whatever happens here, I'm going to wait for some sort of pullback and some good pullbacks, okay? Good pullbacks are what I'm going to be waiting for to be able to take the next trading decision. Good pullbacks, okay? I want to see them. If I see them, I will be very glad to take a position. So maybe pull back off into certain zones. And if you are a Fibonacci trader, okay, if you're a trader that applies more of the Fibonacci tool, all right, so what I'm going to be looking at here is that we're going to be looking at a possibility that we've had a double top. Okay, so price did trade upside, dropped another time down. Okay, so during the news release of the CPI, okay, we had price spike, all right, testing and also rejecting of the zone here. So this is going to be our possible extreme. Okay, I'm going to use this as a possible extreme. And for the Fibonacci retracement traders, okay, so if you are a trader that uses more of the Fibonacci to determine possible points of resistance, all right, you can as well wait on the 38.2, all right, wait for reaction on 38.2, right? You can also wait for reaction around the 61.8 and also the 78.6. Okay, these three areas here should be point we wait for reactions off. All right, we don't know which one is going to react off or where price is going to react off of any of this. Okay, but these retracement areas here are good retracement areas for determining or to determine possible resistance. Okay, so we wait off those structures. We don't know which one is going to bounce off, but if it bounces off any of this one, I think I will be ready to take another short opportunity or short trade to the downside there. All right, we look at pound USD. All right, so I've always spoke about pound USD from a weekly scale that I want to see pound USD move into 1.203 or beyond. All right, I pointed out before when price was trading inside of this zone, also in my Telegram channel, that I want to see price move into the zone here, right from when I had price trading inside of this zone. Okay, there are various reasons why I wanted to see price off this zone back into the zone. Apart from the fact that I'm also looking at a flat pattern. All right, I'm looking at flat pattern. But if we look at overall, the trend here is a global one. Okay, the global trend here is a downtrend. Okay, if we look at the global trend for this one, it's a downtrend. So if you look at it here, it's a downtrend. So everything for pound on a long term, we should be pointing out at a bearish one. Okay, so we have a possible ABC. So I was looking at this ABC, but for this kind of pattern here, I think we're still going to have a possibility or a chance of more drop coming in, that we might have well be working out an A, B, C, W, X, and then A, B, and then maybe a C down here. So there is a great chance that we might be having another leg below this previous low. All right, so what we're working out currently is we're working out a flat pattern. So we've dropped extreme, we've started our A, we dropped our B, and then we moved our C for an ABC. So we have an A, B, and then we have a C down. So we're expecting another leg down to complete that pattern, and then we can then look at another pullback maybe in the years to come. All right, another one on the USD card here is where I'm going to point out to you guys why I have my pending buy orders around this point here. Okay, so let me walk you through why I have that pending order right there. Okay, so I did a previous video which I showed you guys what I wanted to do with USD card. Okay, so apart from the fact that certain things changed, okay, number one, I was looking at possible A, structure, B, structure, and then C, downside. All right, nothing changed from that, but the only difference is that in the formation of the C wave, we had an internal structure. Okay, in the formation of the C wave, we had an internal structure that turned out to be a triple combo. Okay, we had this wave down there. All right, so we had different price formations. All right, down there. So I'm not going to go into counting these waves here because this is what I have been talking about many times in the market. I've been talking about this many times in the market over and over again. It is not all the price movements that you force into the Elliott wave concept. It is not. It is not. Actually not. You don't force every price movement you see into the Elliott wave. Okay? You plan a trade, you look at a trade, you wanted to see the wave count. The wave count doesn't come as expected. Wait for it. If it doesn't come, walk away. All right, there is no two ways about it. All right, the difference between a professional trader and a struggling trader is the application of his wisdom when it comes to application of the Elliott wave. All right, I talked about Elliott wave application, and also with my mentors work from Jeffrey Kennedy, talked about application of Elliott wave. Okay, so it is not every price movement on your chart that will fit into the Elliott wave concept. All right, if you force any price movement to fit into the Elliott wave concept, then you're going to be wrong. All right, you're going to be wrong. All right, so whatever you were doing, you plan your trade, you wait for commitment, you wait for the market to commit to you before you can commit to the market. These are the basic rules, the basic guidelines for staying in this business. All right, so let's look at this one on USD card, how I would look to approach this one here. I did see a breakout of a very high volume candle here, as you can see, of this structure. So structurally, if I take off this one, I was looking at a possible wave 4 here and a possible end of wave here. I was looking at the wave 5 inside of this zone, but when price bounced off once, couldn't stay up at this point here. So here was the very first trap. Okay, so here was the very first trap, and what I did was I knew that price should not be traced below this point here, so I got it on the trade the break of this point here on a retest and put my stop loss below here first on my other account, and then I'm looking at riding this payback into this extreme. Okay, so on this one here, I'm doing this recording here, I'm expecting another retest. Okay, I have various accounts which I trade with. All right, different accounts which I trade with, so I'm looking at a retest for another entry on this other account right here. Okay, so I'm going to take a minimum loss on this one here. I'm going to put my stop loss below this point here. I'm going to put my next entry of this zone. Okay, why do I want to use this zone so spectacularly? Why is this zone very important to me? Let me go ahead, put up a line on that zone there. Okay, I'm going to put up a line on that zone there. This is going to be around 1.261 okay area. So let's look at other time frames. All right, in other time frames, what I'm still expecting is I'm still expecting price to continue upside. Okay, we've had a wave 1 leading structure until price change in this setup here or in this formation here. I'm not going to change my bias on USD card. All right, on USD card, I expect price to continue upside. Okay, price have so far, I feel, based on the Elliott wave concept, okay, based on what price have shown to me, that price have completed an A, B, and then a C pattern. All right, for a flat formation. So this is a running flat, not an expanded flat. All right, so I'm expecting that price should move up to this point. If price fails one more time around this point here, I'm going to expect price to move into 1.137 if price fails off the zone. All right, let me zoom in a little bit and then share with you why I think that. All right, why I'm looking at that is, sometimes market could change. All right, price could change in its movement. That could be as a result of the policies. All right, policies, interest rates, okay, certain things happening in the country, because when you're looking at trading, you are trading a particular currency against another currency, and that's why we call it currency pay. All right, you can be looking at changes could also happen in terms of fiscal policies, interest rates from central banks in those respective countries. So there could be a great shift in terms of monetary policies, okay, and that could also create a change in terms of strength or also weakness of a particular currency against another currency. All right, so for this one here, if this changes, I'm going to look at this as a possible A, possible B. This is contraction, and then possible extreme of C. So if price fails one more time off this zone, I'm going to look at this as a correction. I'm going to look at the major degree trend to continue downside. But overall, I'm going to stay with my initial trade plan of that the flat formation is complete and I've seen an ABC of a higher degree from a monthly and also a weekly scale. Okay, I'm going to look at that. I'm going to expect that overall I want to test on the longer term. I want to test back price to see. I want to see price back into 1.464 territories and also beyond in the completion of the flat pattern. Okay, it's a lot of big game here when you're looking at trading. Okay, so you need to understand what to look out for. All right, and that would also be of great importance to you when you're looking at the Elliotwave concept and also in the application of the concept. All right, so let's look at another one here, AUD/USD. All right, so in my last video on AUD/USD, I showed you guys two areas which you should look out for reaction when it comes to AUD/USD, and my very first area there has seen price reverse off that point. All right, I mentioned it to you guys and I'm going to do it again. Okay, so when I did that video, I had price trading inside of this zone. All right, I passed trading inside of this zone, and I pointed out that if this correction should have completed at this, many times when I'm looking at triangles, okay, I pointed out that to you guys that triangles appear in three areas. Okay, triangle appears in the A wave, okay, or sorry about that, triangle appear in the B wave, the X wave, or the wave 4 of a sequence. So it's three areas to look at for triangles. Okay, so oftentimes these areas triangles appear, okay, are mostly about end of wave areas. Okay, when triangles happen, you're going to expect that the end is near, so to speak of. Okay, the end is near, the end is close, the end is about to come, or we are about reaching the end. That is what triangles are meant for, and it shows you the overall market psychology in terms of market participants' reaction or feeling about a particular market over that price area. All right, I'm speaking too much. Watch out for my next video on triangles. I'm going to share this with you also to give you a full insight on how to apply or use the triangles to make more money off the market. All right, so moving on to this one here, we've seen end of wave formation here possible. It's a whole big game right now. Okay, I don't know what's going to happen in the next few days because we're looking at monetary policies, we're looking at interest rate coming in from United States, and this is going to affect the whole general market. As you know, USD is one of the most traded currency in the world, and looking at this one against AUD against USD, we don't know what the Feds are going to be doing on Wednesday. Okay, so whatever you should be expecting on that interest rate increase, okay, or another interest rate hike. And they also said that they're going to be increasing their interest rate on the every meeting they're going to have from the last time they increased the interest rate. Okay, so we're going to be looking at a possibility that what can they be doing. Okay, will they still be increasing the interest rate? Okay, so if that happens, how will the market feel? Okay, what's going to be the general feeling of the market? All right, so let me just take a pause of this one and then throw more light on interest rate. Okay, so for you guys that are looking at sometimes interest rate most times, okay, are not good signs that a particular currency will appreciate. All right, it is not a good sign that a particular currency will appreciate. Okay, you can have an interest rate hike on a particular currency and you see a sudden spike, okay, on that currency, and at one point that spike or that initial enthusiasm can actually fade out in the market. All right, and you can have it that price continues downside. Okay, so the market doesn't look at the short-term view when it comes to interest rate. It look at the long-term view, because when we're looking at interest rate, we're looking at bond. Relate interest rate with bond price. All right, so if you're having a high interest rate, we're going to be expecting that that's going to also affect the bond market. Okay, that's going to affect the bond market, and if it's affecting the bond market, then it's going to affect the stock market. All right, and if it's affecting the stock market, then it's going to affect the economy as a whole. All right, so high interest rate is going to push people or investors into buying more of the bond or the securities. Okay, in some cases, okay, it will push people or the investors or the large money to go buying the bond. All right, because they are getting a high return, all right, for those securities, okay, for those assets. Okay, rather than saying, okay, I want to put my money off on a stock market. Okay, I can take out some of the money of the stock because price for stock or the stock market have gone too high over a certain period. Okay, I feel because of the whole general market sentiments, okay, I feel it's going to start coming down. I want to take some profit. Moms and dads oftentimes take profit of the market. Okay, so I want to put my money on the bond. Okay, I want to buy treasuries. Okay, I want to buy bond or my treasuries, safety assets. Okay, possibly after that, there could be a great chance that they might be risk off more in the market. All right, say certain thing happen in the market, or I'd say pandemic or some sort of news coming in of something news about, you know, some sort of bad news. All right, be it an expectation of a war, you know, some sort of natural occurrence. Okay, there could be earthquake in some places, and then you know, all these things are going to mean that there will be need for flight to safety. All right, people are going to look to invest their money more in the bond market, and when that happens, the currencies that are mostly affected, go watch out my previous video on what to buy on risk on and risk off. Okay, that would also help you a lot. All right, it's on this channel right here. Go and check it out, what to buy on risk on and also risk off. It will also help you a lot. All right, you can as well expect that if that would be the case, AUD will be the currency that will suffer more in that period. All right, the next one that's going to suffer more in that period is going to be the pound. All right, for more, you're going to be expecting that AUD will suffer in that period, NZD will suffer in that period. We're going to have the stock market suffer in that period, as well as pound will also bleed in that period. All right, so these are what to expect. Go watch on my previous video on what to trade on risk on and risk off. It will help you a lot. Okay, at this point here, you could expect that gold can actually be doing something very different. All right, that's why many of the times, if I'm looking at all this randomness in the market, I love to trade the US Mexican peso or USD ZAR because they seem to have a very steady price movements. Okay, so I will do a video of that for you, okay? Not on this very session right here, okay? All right, so we look at gold. I've said it for gold. Why I want to see what I want to see with gold. Why I want to see that. Okay. I've not really shown you guys why I want to see that. But one of the things I want to see for gold is I think I have a possible correction in for gold. Okay, so I have a possible big time correction coming in for gold, and once that is complete, we're gonna be seeing gold break out of this zone. And once gold breaks out of this zone here, I expect one of my theories I'm expecting gold to get into is gonna be the 2,300 areas and beyond. We're gonna see gold move into 2,300 beyond, 2,500 beyond, because if we look at using the Fibonacci tool here, we're going to be expecting that gold can actually work its way into testing up to 127 or 161.8. This is going to be around the 2,300 areas here, or even beyond up to 2.0. Okay, in some cases. Okay, I don't know what's going to happen, how long it's going to take to happen, but this is what I expect based on the Elliotwave concept to happen for gold. Okay, so we work our way in next into the USD Mexican peso. Okay, so in my last video about on USD Mexican peso, I did point out to you guys, okay, for USD Mexican peso in a double combo formation such as this, why I look at this as a double combo formation such as this is this. Let me share with you why I look at that as a double combo formation. And every trader would have expected that, okay, fine, all right. I also anticipated that this could have been my wave 1 to 2, all right, to possible ABC, okay, to 3 to 4 and then to 5, all right. This should have been what an average or every trader should have expected, all right. And then we start up a new wave, okay, and then continue upside, okay. But these turn out to be these. All right, let me share with you what it turned out to be. We turned out to have an ABC corrective pattern. All right, and this here is then my bigger A or my W leg, and if I look at my X or my B wave, and I'm looking at my C wave to complete downside. All right, I showed you guys that before that the triangle appears in either the wave 4 or the wave B or the wave X of the sequence. All right, so looking at this one, working our way down here, okay, so it's oftentimes a good indication or a good omen when you look at the market and you are able to make sense of the whole market. All right, so coming in on this one here on a daily, we had a very strong bullish candle here that also ended on a high volume. All right, a high volume close. And then we look at another one, also the Harami candle. Okay, so the inside bar candle formation here. This is a good sign of the reversal there. All right, I'm not going to go extend this candlestick formation on this video here, but I'm going to work out for you guys what is happening here. So this here, I looked at my first drop of the ABC and I look at my second drop at the B. So these, I'm expecting that possibly if we have an end of wave structure for a C, all right, many times I point out to you that when you are expecting a bigger wave C or a longer wave C, you might not have it, okay? You might be having a shorter wave C, okay? So if for those that are expecting a longer wave C, all right, you might just be disappointed, okay? For those of you that are looking at a shorter wave C, you might as well be opportune or fortunate, okay? So either way, we're going to look at what the market is showing to us and then apply whatever technique we're going to use based on the Elliotwave concept. All right, so we have a possible A here, we have a possible B here, and this could be a possible C because this was break of previous structure. And I would as well start to see price developments. Okay, so we look at price developments, price candlesticks formation. Okay, we look at that. Last week on a weekly scale, we had that the close of last week ended on price trading with a very strong bullish candle. So this is overall a very huge bullish engulfing candle. Okay, so we want to see price confirm that statement over in this week. Okay, we want to see price confirm that statement in the current trading week. All right, and in the confirmation is what we are going to be waiting for. Okay, we've seen price move up in with very high volume. Okay, high volume, high volume, high volume. Okay, price movement here. All right, so it's best to look at how market would react in the current trading week. Okay, so we need to watch out for formations, price formations, okay, movements in the current trading week. That will also help us to make our decisions based on what the market have given to us. Okay, so overall, as an impulse, correction, impulse. All right, we could expect that this could also be an ABC up. We can expect an ABC down, maybe. All right, for a wave 2. All right, I don't know. Okay, but we need confirmation. We need price to give us patterns, valid patterns. All right, let's walk up off to another one and then look at the USD. All right, this one here is another one I'm going to be looking at out for. I have my reasons why I want to look at this one. Okay, we have what could also possibly be a double top. Okay, I don't know, we could have had a double top for wave 1, for wave 2 here, but I will look at the bearish side more on this one first. Okay, I'll look at the bearish side more on this one first, and if price makes another leg upside, okay, there could be a chance that we might work out an A, B, C, D here. Okay, A, B, C, D. Okay, and then we could work out an E. All right, and then maybe the drop will come. Okay, if you are not very conversant with this kind of formation, I have seen this many times in the market, and as a matter of fact, I'm actually looking at one currently trading on Euro AUD. Let me take a quick dive into sharing with you also that one, because this will also help you in the future. Okay, this is also a similar pattern that developed on Euro AUD, and I shared with you guys when price was trading in this formation here, having made this kind of formation here with the WXY, pointed out that this could also be our D leg, and this was also a very huge profit for me. Okay, so trading in this formation here, we have an A, we have a B, we have a C, we have a WXY to create a D, and we have an E to the upside. Okay, then set to see, I'm not going to work out this one here. Okay, that will be in my next video. Okay, so let's move back into where these are. We're looking at, I wanted to just make reference to this. Okay, this can actually give you some sort of confidence when you're looking at trading. So for USD here, there could be a great chance it's a similar one. Okay, we have a corrective wave here. This could form a D wave. I don't know. All right, I don't know. But if price starts to move up, we have to follow whatever is happening, whatever price is doing, to do the will of price. Okay, we don't know what's going on, but I think a very high volume here speaks a lot of things. Okay, it speaks about a lot of things. Okay, having broken out of this zone, okay, it speaks a lot of things. Okay, we've seen price trade so far away off the 100-day moving average here. All right, so it could speak about a lot of things. All right, I know I got a message that was on Friday, and one of my followers asked me, what if you're looking at a big massive pullback and then price will continue downside? I say fine, it's all a possibility. The market can actually do anything it wants to do. All right, there are things we cannot control in the market, and that is market movements. We can't control them. Okay, we focus. I also oftentimes recommend that traders should focus more of their energy into what they can control. You cannot control price movements, but you can control your action, what you're going to do, your decision making, all right, your kind of risk. Okay, you can control that. All right, that's the game changer. All right. Okay, so for those of you that got into a good position here after this breakout retest with a very good volume, okay, distinctive volume, all right, kudos to you guys. Okay, kudos to you guys. So here we have a very huge volume structure here, so I would recommend a wait off this zone. If price bounces off this zone, okay, be careful that we don't have a pullback and a continuation. Okay, if price bounce off this zone with this kind of movement, stay off. It's going to move one more time, drop one more time before the continuation drops out. Okay, I've seen this many times in the market. I'm not going to go over to show you any illustration on this one. Okay, if you're waiting for it, I'm not going to do that. Okay, I don't have. I've spoken about that in movements. Okay, I've spoken about that before. Okay, let me see. All right, so this is it. Okay, this is it. It's a similar one here. A, B, C, B. All right. A, B, C, D, and then E here. That created W, A, B, C, X, and then a drop. So you can expect that this was the big push that came into play. So if price would drop, okay, in this zone and then make a 5-way move such as this, all right, I recommend that you stay off. Okay, stay off, wait for the X leg and then wait for the Y leg to complete and then push it up. Yay, baby, that's what I'm gonna be doing. All right. Okay, so we look at next one, UK Brent. All right, I shared with you guys previously on UK Brent what I wanted to do, why I wanted to do that, and I shared with you why. This is rejection of a drop. Okay, I spoke about this formation here. Okay, this formation here is what I spoke about. When price does this, that's rejection of a drop. It rejects a drop and then stays up, consolidates, and then continue upside. That's rejection of a drop. Price rejects a drop, then continues upside. You wait for the end of it. Once you can confirm the end of it based on a certain price action, based on indicator, whatever you want to use, once you point out the end of it, short it. All right, short it. That happens every time. Okay, for those of you that are trading the Gatling patterns, harmonic patterns, okay, you guys are very much advantaged in this. Okay, you can actually work out your A. Oh boy, I think I have left. Okay, you can work out your A, B, and then those kind of patterns there. Oh, I just draw a crazy line. Okay, maybe this sort of pattern here. All right, that's good. So we share this whole area, here, and then you can actually expect that. Okay, it's a possibility. All right, so the last one we're looking at here on this video here will be silver. Okay, I just want to take a quick look at silver to see what's going on with silver. Okay, silver also did a similar formation last week, and a huge drop came in, and then another push happened. But overall, silver has been more of sideways for quite some time. All right, it's a breakout, it's a break off a structure. Okay, so this could have been a consolidation here. So this could have been, when I'm making videos such as this, okay, I very much appreciate my audience. I very much appreciate those of you that spend time to watch these videos. And if you spend a lot of time to watch my videos and then follow my videos step by step, it's going to change your life. Okay, I've had very good report, very good replies, very good messages from followers on how well my videos have changed their trading lives. All right, and that's why I spend more time making these videos what it should be, spending more time to analyze the videos. I've also gotten contributions and also comments. The last one I got was that my background is oftentimes noisy because I used music on my background. So I'm making this one without any background music, okay? And I'm trying the best I can to slow in my presentation, okay? That is because one, I don't want to make a very lengthy video, okay? I want to try as much as possible to hasten up and then be fast in my analysis so that I will make short videos, okay, without having to make very lengthy ones, okay? All right, so this one here we have a 5-week move, okay? All right, this is another one we should watch out for, okay? This is a very good unique setup for an A, B, C, D. Push up is what we expect now, okay? And another push down is what we expect, okay, before the next final push, okay? This happens every time, all right? 80% out of 100 it happens, okay? It happens, okay? So how do we plan this one here? I don't know what to say about this one here, but whatever happens here, I think this is start of a wave, okay? Whatever is happening here, this is start of a wave. So what we're going to be doing first is I want to point out possible extremes, okay? We have possible highs, double test. So this could be a area, okay? This could be a pushback. All right, let's look at it. So possibly if price should hit 61, okay, it could be a good buying area of this zone around $21.19. Okay, so I don't know, to look at buying off that zone to the upside. All right, so see you next time. Subscribe, like, and also share these videos with friends. That will be the best thank you, and it will also help in the creation of more videos such as this one in the future. See you on the next video.